All right, so I want to go over this trade that I took from this morning New York session for June 6th. Today we had NFP at 8:30, but right now, as you guys can see on the chart, I have the E-mini index futures on the left, E-mini NASDAQ on the right, and I've marked out London session high and low between 2 a.m. to 5 a.m. And ideally, this is the setup that I would love to take. As you can see, price came down, took out London range low, and then reversed higher. But unfortunately, this happened at 7 a.m. Normally, I like to take these trades when the rate is closer to 9:15, 9:30. Same thing over here on NASDAQ on the right. You can see how price took out London session high here and reversed lower, but this happened at 6:15. So again, too early for my session. So I had to wait until after market open. That's when I take trades. But where I have these red flags here on both charts, that is the 8:30 candle showing the NFP news release. All right. So as you can see, NFP just shot higher and moved far away from the London session range. So I had to wait for the next liquidity pool to be engaged. And my trade for this morning came in after price took out previous day's high on the S&P. So if I hit play here, you'll see how price is going higher right here. And now take a look on the left chart. You can see price breaching previous day's high, but if you look over here on the left, you'll see just how far away we were from the same level on NASDAQ, really far away. So I took this as some divergence or SMT, and I looked at the S&P to trade. So when I have divergence between two correlating assets, I always choose the market that reaches into the liquidity pool to trade, because when I go back to my journal and I look at the trades I've taken, I want to look at the trades where I'm consistently doing the same thing from my checklist, right? So sure, I could have traded NASDAQ here, but the reason why I chose S&P is because I want consistent setups that are reaching into my liquidity pools, all right? So after getting this raid on liquidity, I began looking for just the first bearish engulfing that formed, and that actually happened right here. And this was shortly after 9:50. From there, I dropped down to the 1 minute and I began looking for an entry. So if you take a look at this on the left chart, there is a small imbalance here. The reason why I did not enter here is because I felt like the 5 minute closed just a little bit shallow beyond this low here. So this was the low that would have given me that bearish engulfing. It just seemed a little shallow to me. So I waited for price to show me just a little bit further confluence that it wanted to go lower. So I waited for it to get down here. As price is dropping, I'm looking at this on the 1 minute, but on Trade Locker. All right. So I've got Trading View up on one screen. I'm actually watching it live on Trade Locker. The reason for that is because it takes longer for me to set up a pending order, unlike how it is on Trading View, right? On Trading View, I can throw up the position tool and just set up the order that way. But on Trade Locker, I kind of have to set the pending, drag and drop, enter the lot size, and then manually put in the take profit. It's a little inconvenient. So I'm watching this, and as soon as we close below this previous swing low from 951, a fair value gap formed. So let me just show you that here. Okay. This gap right here is where I placed my pending order. I went short right here. Entry was shortly after 957. I mean, like it was just right in at around 957, 958. My stop went above the swing high from 9:49 a.m. and I'll mark that out in red. At this point, I was just targeting 3R, and on Trade Locker, because I'm trading a derivative contract, 3R for me was at these relative equal lows right here. But as you can see on Trading View, it's a little lower. All right, so I'm just gonna mark out this area because this is where my 3R was on Trade Locker. So I'm just gonna make that black, and I just let the trade run from here. So I did go through a ton of chop, but I want to show you the price action here as I hit play and just show you the other divergence that formed. So if I hit play here, see price comes up, doesn't take me out. I go through a lot of chop. You're going to see price spike up one more time. All right. Start to head down towards the target, then it reverses. And it does one more spike here. Right here. Okay. So take a look at this. If you compare this to both markets, you can see how our high from the morning, New York, 946 is looking down on 1106, and 946 on NASDAQ is looking up to 1106 on that same time. So right there was some more divergence there, and shortly right after that, here's what happened. Price melts straight to the target, and I was able to get out of that trade. All right, if I was trading NASDAQ, of course I would have been stopped out here from that 1106 spike, but it just so happened that I chose the right market. Okay, so no matter what happens to me, I just want to stay consistent in trading the markets that are actually reaching above those liquidity pools that I like to watch from my plan. But this was just a nice trade today. That 1106 candle could have stopped me out on S&P, but in this case it didn't. And so here's the recording from this morning.